Capital Group has long heard demand for ETFs. For many years, we had heard from advisors that they really like our investment management. They love the American funds, but they'd like to have those strategies available in an ETF with the benefits that they've come to know, the tax efficiency, transparency, and tradability. So that's what we did. In 2022, we took advantage of the new ETF rule that had passed in 2019, and we launched our first suite of actively managed ETFs from Capital Group. We initially started with 5 equity and 1 fixed income, and we've grown that suite to now 25 ETFs across equity, fixed income, and even multi-asset. And our core philosophy was bring out Capital Group's investment process in an ETF vehicle and deliver that with the lowest and easiest access that we could find. From the very beginning, we wanted to develop a suite of ETFs that filled the major asset allocation categories that advisors used to meet their investors' needs. So that included US growth equity, international equity, and fixed income. And so over time, that's what we've done. And we've now culminated with the launch of 8 actively managed model portfolios that leverage exclusively Capital Group's ETFs. Today, a couple of stats for you. Capital Group ETFs now total $117 billion in assets. We serve over 50,000 financial advisors. And we're one of the leading, if not the leading, actively managed suite of ETFs that's growing organically in the United States. Yeah, momentum in the active ETF space is continuing to build. It started back when the rules changed in 2019, and it's only built from there. Actively managed ETFs now make up over 11% of ETF assets. That's up from 2% just 6 or 7 years ago. And the active industry ETF flows also are continuing to take a large percentage. This last year, they were about a third of the $1.5 trillion in ETF inflows. So we see the growth continuing. We also see the growth of the number of active ETFs being launched. Last year, there were over 1,000 ETFs launched in the United States, and I think 83% of them were actively managed. Now, in the industry, over half of all ETFs are actively managed as well. So we see continued innovation, we see continued growth, but I think one thing that will distinguish a lot of ETFs from others is which ones truly thrive. Capital Group has 20 of its 25 ETFs already over $1 billion, able to have scaled and reached advisors, which helps them with liquidity, helps keep costs down, and helps ensure that executed trades are done well. Since coming out with ETFs in 2022, one of the things we've heard consistently from advisors was, how do I use these in my client portfolios? And can you give me an easier way to deliver them? And the answer to that is, yes, we can through models. So early last year, we did develop a suite of all active ETF models to complement what we had already, which were blended active passive models, as well as mutual fund models that used the American Fund Mutual Fund. And as I look ahead, models are going to be a continued growth area for the entire industry. Whether it's asset managers building models like what we've done, or third-party managers or broker-dealers, all delivering model solutions, this is a way that advisors can scale their practices and deliver consistent outcomes to their clients. The ETF continues to deliver different types of innovation, whether it's in the investment strategies inside of the ETF or the vehicle itself. There's a lot of things that are developing on the regulatory front, and we expect that to continue. But I think the innovations that are going to be most powerful and most impactful to clients are going to be core strategies, core models that really help to meet some of those enduring client needs, like income in retirement or appreciation and growth for college savings or retirement savings. So the ETF industry will continue to deliver interesting and novel innovations. And I think it's an exciting time for us. We will be focused on the end investor outcome and what helps advisors serve their investors.